Mario Singh is co-founder and CEO of FX1 Academy and joins us now from Singapore. Mario, thanks for joining us. So how low do you think the euro is going? I've seen all kinds of forecasts over the weekend, some suggesting parity, some suggesting down to just 110, but the timescales seem to be anybody's guess.
Hi, Anna. Well, the heat is really on now for the euro. Who would have thought, like, say, 4 or 5 months ago, we saw the euro trading at about 151, and it has plunged literally 3,000 pips in the last 4 months. So how low could it go? My guess is it can probably go down to parity. But as I say, for the short term, I do see continued weakness for the euro. I'm seeing levels about 120, and below that's going to be about 115. There's just no good news coming out of the whole eurozone. No doubt that a whole $1 trillion package, but investors are just not concerned at the scale, at how much the whole euro has got to come together in a show of their solidarity.
Mario, a lot of people are now piling into the US dollar as a safe haven, but a lot of people are also now questioning the exposure that US banks have to the eurozone. So is this kind of safe haven status of the dollar short-lived?
Well, for at least in the short term, it will still be a lot of huge safe haven flows are flowing into the US dollar. Not just the US dollar, it's going to be also the Japanese yen. So what is great now for the US dollar, they are really in kind of a sweet spot. They're seeing their fundamentals increasing, their economic output is also increasing. So many investors at this point, they are having a lot of positive sentiment on the dollar as opposed to the euro or the sterling at this point.
Mario, what's so new about the weakness in the euro today, or what is new in today's trading environment? Because the $1 trillion package was never designed to put a floor under the euro. It was not even designed to do the structural reforms that many people seem to be expecting of it. It was just designed, as Angela Merkel has been saying, to buy us time. We always knew that the economies of Europe looked pretty weak, and now they need time to address that. Why the sudden panic?
Well, Anna, the key thing for investors is that there really aren't a lot of details that's coming out of the whole EU IMF bailout package. We know that all the huge amounts of $1 trillion now, that's going to be a huge shock and awe, as they call it, for the markets. But investors are just a little bit disappointed at this point in terms of the concrete details that they have on the whole package. We have seen news that the whole IMF, they are currently under $200 billion. So for the amount that they are putting up on the package, no one really knows where the money is coming from. My best take is going to be coming up from US taxpayers.
Well, no detail, Mario, but there's no need for it at the moment, is there? I mean, no country actually needs this money, apart from Greece, which is a slightly separate issue, and the money has been approved, and we hope on its way to the Greek government. But no other country, this was designed to prop up the rest of the periphery, and none of the rest of the periphery actually needs this money.
Yes, and I agree at this point. At this particular moment, not a single country in the whole Eurozone needs the money, but it's more of a show of solidarity. Many investors, after they have speculated on Greece, so to speak, they're all turning their attention to Portugal, to Spain. We've seen how their bond spreads or literally their yields have increased. The CDS, the credit default swaps, have all skyrocketed. So really what the EU has got to do now is to stand firm, to show at least a front of solidarity among themselves to push up investor confidence in the whole EU zone.
While that is happening, you mentioned speculation, a lot of talk that China could actually use this volatility as an excuse to hold back on currency reform. Do you think that's a possibility?
I think that is definitely a possibility. Everyone is clamoring for their yuan appreciation in the next couple of months. I will see that happening also. But what the Chinese government officials are always trying to do is to find certain reasons on how they can always appreciate on their own terms. They are looking at all this financial fiasco, if I may put that, but I still see an appreciation of the yuan coming at least in the next 2 months.
Right now, give us a quick pick. What currencies do you like? The dollar, you seem to like that kind of bit. What about the Japanese yen? What other safe havens are there?
I like, at this particular point in the short-term flow, I like the US dollar, I like the Japanese yen. We see the euro dropping against the yen, the euro dropping also against the dollar. So euro, sterling, even all the commodity currencies all dropping. Right now, they're all inherent weakness among these 5 currency pairs at least. And I will see a lot of strength, at least in the US dollar, Japanese yen, leading up to the next 2 weeks.
Very quickly, you don't see the BOJ intervening to kind of calm or cap the yen's rise?
I don't see that happening now. What they have done is that they've injected 2 trillion yen into the whole money market system. They might have another injection to calm that, so to speak. But at this point, even if they were to do that, it's going to be a lot of strength still for the yen and the US currency, simply because of safe haven flows.
All right, Mario, thank you very much for your time. Good talking to you. Mario Singh, co-founder and CEO of FX1 Academy.